Good afternoon, everyone. Welcome to the Individual and Business Tax Updates in the Time of COVID-19 webinar. My name is Courtney. I am glad to be the host today. Before we get started, I would like to let you know that this webinar will be recorded by us and will be available for replay on our website. So please go follow us on social media platforms so that you don't miss out the information. Chat board is open for everyone during the presentation. If you have any questions, please feel free to leave comments. We will leave around 15 minutes for the Q&A after the presentation. As our founder Iris mentioned above, we are offering a 50% off discount for our audience today. Our members can enjoy 6 to 8 virtual webinars and seminars monthly, and also enjoy other benefits such as a 1-hour free legal advisory service. You can scan the QR code on the screen and join us today to enjoy the special discount. Today, we're honored to have Michael Wu here to explain the most updated policies of individual and business tax in the time of COVID-19. Welcome, Michael.
Thank you. Hi, I hope everybody can see me okay. And I think the most important thing is I'm going to share my PPT so everybody can see the slide. First of all, thank you, thank SVIEF this opportunity for me to represent today. And I understand, hold on a second. Can everybody see my PowerPoint now?
Yes.
Okay, good. Yeah, I understand, because of this virus situation, a lot of us, we have been working at home, and it certainly causes some inconvenience to our life, right? Not just our working life, but our family life, everything. I'm not here to talk about who caused that situation, and but what we're going to talk about is our government has tried everything, right, financially and to help the people in the U.S. Okay, so today's presentation, I'm going to separate. Hold on, to make sure it works. Okay, I'm going to separate all these tax laws, right? Everybody heard about CARES, and of course there are some other acts, right? Other laws that are related to this CARES Act. If you follow the news, there's another new law called HEROES. It's in the Congress. So the House is going to vote tomorrow, which means if it passes, then you go to Senate, right? If it's passed the Senate, it'll go to President. And there's going to provide even more benefit. But personally, I'm not sure it will pass, right? So I think it's a more political fight, between the Republican and Democrats. Okay, as I say, I'm going to separate between the individuals and business. So individual, a lot of the news is on this economic impact payments, which means everybody will get $1,200. It's $1,200 per person. If you have a kids, it's under 17, and you get $500, in addition to that $1,200. So $1,200, if you couple, you get $2,400. The recipient must have a Social Security, so which means if you only have a ITIN number, right, like you are a foreigner, you file 1040 NR, and you are not qualified for this incentive, if you will. And once you get this money, now, right, which is in 2020, and this does not have to be included in your 2020 tax return. So which means you don't have to pay tax on this $1,200. There is some limitation. So for married filing jointly, right, it's $150,000. So which means if your tax return, your taxable income is above $150,000, there's going to be phase out, right? So if you 10,000 over, and you take that 10,000 times 5, right, which means $500. That $500 would be used to reduce your $1,200. So for single person, it's $75,000, right? So because of the phase out, so once you reach $99,000, you're not going to get anything. So there's a limitation for that. So how would IRS know how much you make in 2020? They don't know. So they're going to base on your 2019 tax return, right? What's your AGI, right? If you look at your 2019 tax return, page 1 on the bottom, and there's a line called AGI. So they're going to use that number as a base to determine how much they're going to give you. But 2019 tax return was supposedly due on April 15 of 2020, but government actually extend that due date, right? So everybody know now the due date is in July 15 of 2020. So for those people who have not filed their 2019 tax return, the government will use your 2018 tax return. So they look at your 2018 tax return AGI to determine how much they're going to give you. And so here's a very good thing about that. So let's say you 2019, you actually make, right, a couple, you make more than $150,000. So you didn't get the entire $2,400. But in 2020, a lot of us, our income might be reduced, right? As you know, there's more than 30 million Americans lost their job. So you will see a lot of US people, they're going to have a reduction of their income in 2020. So in this case, when you file 2020 tax return in 2021, the government will give you more, right? You will become a credit, right? So for example, when 2021 comes, and when you prepare 2020 tax return, you calculate your tax liability, it end up to be $3,000. But you can take that $3,000 minus $1,200, you only pay the $3,800, the remaining. So it will become a credit. Some other people ask me, what if 2019, I own, my husband and wife, we only make $140,000. So we received that $2,400 from the government. But in 2020, we actually make more money. Do I have to return part of that $2,400 back to IRS? The answer is no, you don't have to. And in terms of timing of receive this money, I think everybody should have received that. IRS also say, when they give the money, normally they just wire to your bank account. So a lot of us, we file tax return, we put our bank account information on the tax return. They will, based on that information, just wire money to your bank account. And earlier in March, IRS actually set up a website. So for those people in the past, you never fill out your bank account information on your tax return, you can get on this IRS website and input your bank account information. So after you receive money, within 15 days, you should have also received a notice from the IRS, right, which will say, hey, we already give you, $2,400 or $1,200, whatever the number is, and you should have received that. So on the website, I hope everybody can see that. If you haven't received your check, there is a website you can check, right? There is a www.irs.gov/EIP. So you can check that on their website. Okay, so that's all about the $1,200 per person incentive. For those of you, if you have any questions, you can Steve in the chat room. I'll try to answer that. I think we did a survey. Most of the people who wanted this seminar to be in English, but I will be more than happy to answer your question in Chinese. At the end of this seminar, I will also leave my contact information, which include my WeChat account, right? So you can feel free to WeChat me with your questions. Okay, so next thing for individual is this retirement funds. Retirement funds, one change is there's going to be a penalty-free withdrawal, right? For the people who have a retirement fund, if you withdraw money too early, right now the mandatory withdrawal is 70.5 years old. So if you withdraw too early, there's going to be penalty, right? But IRS say for 2020, you can withdraw up to $100,000 without any penalty. And this $100,000, of course, you don't have to pay penalty, but this $100,000 will become your income. And so the law also say the income, you can spread out over 3 years to recognize that income. Also, by the end of the third year, if you decide to pay back this $100,000, and you could, and you can pay it back without being taxed. So, which means you can take your money out and use, just get over this difficult situation if you have a financial difficulty because of this virus situation, right? So this is specific for this coronavirus related the issue. So there are some qualifications, if you will. So first of all, you have to prove that you or your spouse, right, husband or wife, have coronavirus. You got infected coronavirus, or you can somehow show that you have some financial issue, which it could be you lost a job or your business have to shut down, so you didn't have any income for 3 months, right? So as long as you can show you have some financial difficulty because of this coronavirus, you can definitely take out the $100,000 from your retirement plan. And the second thing is you can take out a loan. Before this law change, the loan limitation was $50,000, but now it's up to $100,000. So you can take out a loan, but the loan is something you have to pay back, right? Whether it's a 401k plan or something else, you have to pay back. So before, the law says you have to pay back the loan within 5 years. So now it gets extended 1 additional year. So as long as you pay back 6 years, you'll be fine. Another thing is this so-called RMD, right? Required minimum distribution. As I say, the law was by the time you reach 70.5, and in that year you reach that age, then by April 15 of following year, you have to start to take out money from your retirement plan. So this law actually says you don't have to do that. If you want to leave your money, they won't force you to take out in 2020. And so this will also affect, somebody just turned 70.5 in 2019. So they were supposed to take money out by April 15 of 2020, but you don't have to do that anymore, right? So this can, you have to look at your financial situation, right? Sometimes it might be good if you take some money out because you need the money. But for a lot of people, it probably good if you still leave them the money, that retirement fund in the plan. You know why? Because if you look at the stock market, in the last couple months, actually dropped quite a bit. So if you want to leave the money in the plan, you'll probably go up, right? The whole stock market will probably go up, in hopefully the second half of the year, right? Who knows? I think as long as in the U.S., the government, each state, each city, each county, we have a better control of this coronavirus. I think stock market will go up. I think last week actually did quite well. So that's one thing. And the other thing is when you take this money out, it's subject to tax, right? So by leaving the money in your retirement fund, at least you don't have to pay tax right away. So that's an advantage that you can consider. Okay, so that's about the retirement fund. The one thing it's not on my slide is remember back then if you have an IRA account and you can switch to Roth IRA, right? And I'm not going to get into what's the difference between regular or traditional IRA or Roth IRA. But normally when you have traditional IRA, it's pre-tax money. So if you're gonna take out, put it in the Roth IRA, you have to pay tax, right? But the benefit is, in the future when you retire, you take money out of a Roth IRA, you don't have to pay tax anymore. So the thing is, a lot of people their taxable income maybe drop in 2020, which means it will probably push you down to a lower tax bracket. So you might want to think about, hey, is 2020 a good year for you to switch from traditional IRA to Roth IRA? So that's just a side point there. Okay, then third thing that for individual is called explain the unemployment benefit, right? Unemployment benefit is when you lose a job and you go to each state, right? You apply to state, say, hey, I lost a job, I need apply for this unemployment benefit. So because of this coronavirus, every state, they basically don't have that type of money to pay all these people who lost their job. So federal government actually subsidize, all the states, so they can pass this money out to those unemployed. And there's a lot of benefit. Actually, if you already lost a job for more than these 2 months, you can still apply. It's a fair, now it just, they make the process easier. It's fairly easier to apply. And on top of that, they will give you the regular unemployment benefit. On top of that, they also give you $600 per week additional fund. Of course, if you follow the news, there are a lot of criticism on this additional $600 per week. I think this is a good thing for a lot of people, but some of the people saying, hey, there's just so much money. You think about it, right? $600 per week, right? So for whole month, that's $1,200. If you have a couple, both of them lost a job, that's an additional of $5,000 per month, right? So I was looking at the TV news the other day. There was one state, it actually they had a statistic. It actually showed 77% of the people in that state who lost their job, now they're getting all this unemployment benefit. And the amount they receive, they were more than what they used to work when they receive the salary or wages. So, so that's why some other people say, hey, if we keep giving, such a great benefit to those unemployed persons, and they will never want to come back to work, right? And if people don't want to work, our economy, all this, we get into even more trouble in our society. So that some people are talking about that. I just saw that on TV the other day. Okay, so this another side point, for people who are doing well, right? The charitable contribution, right? If you want to donate in some nonprofit organization, when the law changed in 2017, right? The new law, the new reform, the charitable contribution can only be claimed if you file itemized deduction. So this new law saying, if you don't have an itemized deduction, that's fine. You use a standard deduction, but we're going to give you $300 deduction if you make a donation to a nonprofit organization. And the other thing that the tax reform change was the contribution, you can only make a charitable contribution up to 60% of your AGI. So now the law actually changed, if you earn $100,000 in 2020, you can donate everything. So they actually raised that basically take out that limitation of the 60%. Okay, I think I'm going to see if I can check and see if anybody have questions. Okay, I think some people use chat. For some reason, I cannot see that. But again, don't worry. Right? We, after this, we'll probably leave. We'll leave a few minutes for everybody to ask questions. Otherwise, as I say, you can always reach me through email or WeChat. Okay, so now I'm going to get to the business. Right, this is most of talk about topic, right, which is called PPP loan, right, Paycheck Protection Program loan, and there are some other loans I'll touch upon as well. PPP loan is governed by this organization called SBA. It's a Small Business Administration. Small Business Administration has been around for like 60 some years. It has helped a lot of small business, but you probably never heard of it if you didn't need any help from this administration. But now SBA is the organization, or it's an agency. It's actually a federal agency. So this agency is helping people getting this PPP loan. There's some requirement. First of all, your business has to be 500 employees or fewer. So you cannot have big business, right, over 500 people. I have a typo here, but the second point actually say affiliate aggregation rule apply. So which means, if you have a parent company, have 200 people, but it has, 2 subsidiaries, each one have 400 people, the law asks you to aggregate. You got to put all these numbers added together, and that will be over 500 people, and you're not qualified for this PPP loan. For my practice, I actually have a lot of clients. It's enterprises from other countries, especially China or some other Asian countries, right? So they come to the US, but they have a parent company in China. And in the US, they have a subsidiary. So the subsidiary could be only have 100 people. But when you look at this APP loan qualification, you guys look at, hey, your foreign company have tens of thousands of people, and therefore they will not qualify for this loan. And this loan, we'll get into, there's a forgiving part, right? Which means you get the loan, you don't have to pay back, right? We'll get to that later. The other good thing about this loan is it's guaranteed by SBA. So which means, you don't have to have your house as guarantee or you have the company's inventory as guarantee or collateral, that type of things, right? It's all guaranteed by SBA. The interest rate is extremely low. It's only 1%, right? Maturity is 2 years. So the question is, how much can I borrow? Here says you can borrow 2.5 times of your average monthly payroll, right? But limited to $100,000 per workers, right? Then also it cannot be over $10 million. So how do you calculate that? So let's say you have 50 employees, right? And you look at their average salary, and for annual salary, it's about $80,000. So first of all, you take $80,000, you divide by 2, right? Divide by 12, right? Which is 12 months. Then you times 2.5, and that should give you about $17,000. Then you take $17,000 times your 50 employees, right? That will give you about $830,000. So that means you can borrow up to $830,000 if you have a 50 employee and your average payroll is about $80,000. So that's how you calculate. Another question, when the law came out, a lot of people asking this question, and when you apply the loan, you look at the application at the bank, and they always have a different interpretation, what's the average payroll. So eventually the government clarified this point. It says the average monthly payroll, you can take 2 approach. One is 12 months before you take out the loan, right? So right now it's in May. So then you consider from May 2019 to April of 2020, this 12 months, right? And then you calculate average payroll, and that's the way you do it. The second way is you just take an entire year of 2019. What's your 2019 average payroll? So that's a 2-way to do that. Okay, as I say, why the PPP loan gets so much attention, all that, is it has this forgiveness, right? Normally, if you borrow money from bank or from anybody, from your relatives, from anybody for your business, then eventually that person say, you don't have to pay back anymore. And normally that will become your income. You have to recognize that income. But in this case, you don't even have to recognize the income. But you also say, how much can be forgiven is your 8 weeks, right, from the time you get a loan, right, you receive a loan. During these 8 weeks, all the money that you pay for the payroll, or you need to pay some mortgage interest, or you have a rental machines, right, equipment, that interest piece. Also, you pay rent for your office and your utility expenses for your office. All these expenses within that 8 weeks, it will be forgiven. So that's the same, right? So when we calculate the average payroll, we were based on the 2.5 months, right? 2.5 months is almost like 10 weeks, right? So you say, hey, here I have the payroll costs, only 8 weeks get forgive, but you have interest, rent, and utility. So hopefully, most of the clients that we look at, they were able to keep everything. They don't have to pay back anything. So The other rule is the non-payroll cost, which means the interest and rent and utility. It cannot be over 25% the overall the loan. Okay, and last point we already talked about. This forgiven, it's all canceled debt, but it's not taxable. There's a special rule for that. Okay, so this PPP loan, right? It's for your employee retention type of thing, right? So the government give you money and also forgive this loan. It's hopefully you use this money to pay your employee, not lay them off, right? If you could just kind of take the money and lay people off, it defeats that purpose that the government actually want to give you money. And if you look at the newspaper a couple of days ago, there are a couple of people got caught. They get a loan, but they didn't pay for this employees' salary and wages. One of the guy was a trucking company, right? So he borrowed several $1 million, and he went out and get a very expensive car and basically and jewelry, all that stuff. He basically just spent it, right? So he got caught, right? So now it's in the court. So people is kind of watch over this. So here's one of there are two limitations. So one is this employee reduction. If you borrow all this money, you're supposed to be paying the employee all that stuff. But during this 8-week period, you actually lay people off. So there is a calculation here. So you basically say, hey, these 8 weeks, and how many employees do you have, right? Full-time employee you have, compare with what you had before, right? If there's a reduction, then your forgiving amount will be based on this ratio. It will be reduced by this ratio as well. So then the other one is a reduction of a salary. Some of us might be taking a pay cut. Okay, I don't know I think in the Valley, right, most of the high-tech companies, they're actually doing well. We haven't seen a lot of people that get laid off or getting a pay cut. We haven't seen that much. But if you look at the people working at restaurants and other business, right, and they got hit pretty bad. So basically here it says if you have a reduction of the salary, and that would create another limitation, and that will reduce the amount of forgiven, right? The loan forgiveness that will reduce that for loan forgiveness. One thing is that you can avoid this reduction. Let's say during this March or April, that's the most difficult time, right? You actually have that couple of people go, or you have to reduce certain employees' salary. You can actually make up. You can restore that by June 30th, right? You hire people back, and you get their salary back to normal, and in that case, you can avoid those limitations for the loan forgiveness. Okay, now how do you apply for this loan forgiveness? Oh, basically you have to go to the bank, right? The bank that you borrow money from, and you have to submit all this documentation, right? You have to prove that you actually have this payroll, and you pay your rent, you pay your interest, you pay your utility, that type of thing. So you have to have all this receipt to prove. And also you have to attach this certified statement, right? Basically, it says, everything I represent is true, under the penalty of the perjury, right? So you make sure that you present everything is true or accurate. Okay, there are some other loans. By the way, the PPP loan, as I checked last night, remember the PPP loan, the first tranche of money actually came out in early April. That's when the CARES Act passed. Then within 1 week, all the money was gone. So in early May, the law passed again. So there was a new money came in early May. So I checked last night, there's still some money. So if you need to get a loan, you can still do that, right? Just go to your bank, to talk to them and fill out an application. The application it's fairly simple, but not everyone can qualify. So that's the thing. The second tranche, which is the May money, when it came out, it actually says if you self-employed, you can apply that too. The one in April, when they came out, it says the self-employed that does not qualify, right? But now it does. So besides that, there's also called economic injury disaster loans, right, which is governed by the SBA as well. You can loan up to $2 million, and when you apply that loan, they also give you a grant of $10,000 that, right, you don't have to pay back. But $2 million you have to pay back. But I just checked that last night as well. I think that money has been depleted. So no more money coming out from the economic injury disaster loans. But there are some other, traditional loan or express loans. There's some other type of loan that are available through SBA. So if you have some need, of course those loans you have to pay back, but and also the guarantee, you don't, SBA will guarantee part of that. They will guarantee like 80%, right? So you only need a small, let's say inventory or some kind of asset as a collateral. So, if you're still thinking about getting a loan, I'll definitely ask you to get on their website, SBA website. Well, time flies. It has been like 40-some minutes. I gotta go fast now. Okay, second thing for business is called employee retention credit. What's the retention credit? Retention credit basically says for employer, right, you have to pay the part of that Social Security for employee, right? Normally we talk about that 6.2%. It does not, include the other piece, that the Medicare part, right? So it's a 6.2%. So basically it says, each person, it would say 50% qualified wage up to $10,000 a day, which means $5,000 per person. You can save $5,000 per person on the Social Security tax. And this is refundable. So what do I mean by that? Well, let me see. If you get a PPP loan, right, like I just talked about the PPP loan, if you already have a PPP loan, then you cannot get this retention credit. Okay, so that's one of the limitation. And second limitation is if you're self-employed, you're not qualified. Okay, so this is for more for a company. Right, so here's some qualification. First of all, if your business got shut down, right, locked down because the government, either the county or the state, ask you to lock down, right? It's a fully lockdown or partially, and you'll qualify. Or you experience a significant decline of your revenue, right? So same time this, during this quarter or same time of last year, you were making a lot more money, right? Your revenue dropped quite a bit. Then you will qualify. Okay, so normally the Social Security tax, all that stuff, you report on 941, right? There's your payroll tax form. So we all know that, but the government actually want you to get this money quickly. So So if you calculate, normally you have a withholding tax, right? Either the income tax you take out on the employee's paycheck, or this is Social Security, tax, both the employee piece and employer piece. You can just hold on to it, and you just don't pay to the government, right? By doing that, you actually hold on to the money earlier. And if you say, hey, I hold on to next the payroll tax return, I hold on to the money, but it's still not enough for the $5,000 per person, you can actually file this form called 7200 to get a refund. And the IRS is supposed to give you a refund very quickly. Okay, so that, well, here's some large employer that have more limitation, right? If you have more than 100 full-time employees, then there's some more limitation. I'm gonna skip that. I'm gonna go to the next one. There's another thing, it says delay of a payroll tax payment, right? So the one we just talked about, you can have up to each employee, you can $5,000 saving on their payroll tax. And here it's a delay. You will have to pay, but you actually pay later, right? So company can defer the 6.2 of Social Security tax. You pay in the end of 2021, and the other half you pay in the end of 2022. So that will save you some cash in 2020. So that's the whole purpose of that. Okay, there are some other things. I'm going to go over that quickly. Some of it could be very important for companies. At the time, before the 2017, the tax reform, if you have a loss, but you have an income, all right, taxable income before, right, in the previous year, you can actually carry back your loss to previous income. For example, 2017, you have a loss, but 2015 and 2016, you made a lot of money, you pay a lot of tax, but you can use your 2017 loss and carry it back to 15 and 16 to get a refund. And when the tax reform put into law, it basically says you can no longer carry back your loss starting from 2018. You can only carry forward. And even when you carry forward, let's say 2018, you lost a big chunk of money. In 2019, you make tons of money, right? And you will think I can use my 2018 loss to offset my 2019 taxable income. But there is some limitation. For example, in 2018, you lost $100,000. 2019, you actually, you make $200,000, right? So you think if I offset that 200 by this $200,000, then I only have to pay tax on $100,000 in 2019. But the tax reform actually says in 2019, when you take this 2018 carryover, you can only use up to 80%. So which means your $200,000 income, you can only use $80,000 of a loss, right? So you still have to pay tax on $120,000. So that was under tax reform. So now the law changed, right? Only for these few years, 18, 19, and 20, you can carry back your loss 5 years. So then you say, hey, 2018, I already filed your tax return already been filed, right? And I had a loss in 2018, but 14, 15, I make tons of money. Yeah, you can go ahead, amend your tax return, right? Amend your 2018 tax return and carry back the NOL to 14 and 15 and get cash back. So that's one thing. The second thing is this 80% of the tax, the carry, NOL carry over offset the taxable income limitation, right? So for 2021, it's not it's a repeal for 1 year, basically. You just say, hey, you can use all 100%. So that's an NOL carry back. So for us, for the last couple 3 weeks, we look at all our clients, we look at all their previous year tax return. Then we determine there is some opportunity, and then we currently preparing tax return and try to get a refund for them. Business interest limitation. This is under the tax reform, right? Tax reform actually says if you have an interest expense, right, the amount that you can deduct is subject to limitation. It's subject to 30% of your taxable income, adjusted taxable income. So for 2019 and 2020, that limitation actually get increased. And so basically, it will allow the business deduct more interest expense. Okay, so that's one thing. The AMT, right? As you know, the for individual starting from 2018, we still pay AMT, right? Although it's harder for us to pay AMT. Before it's easier for taxpayer to fall into the AMT. For the company starting from 2018, there's no more AMT. But then you ask, what if I pay some AMT before 2018, right? Let's say in 2016 and 17. So the tax reform actually says, if you pay some AMT in the past, you're gonna get a credit. You're gonna get a credit to offset your future tax liability. Then if, for several years, then eventually we're going to refund you. So the COVID-19, this new law came out, it basically says, you don't have to wait that many years, right? You can get a refund right away. You can go back to amend your 2018 tax return and get your previous paid AMT as a refund quickly. So this will be processed by IRS within 90 days. So you should get the cash right away. Okay, this is probably the very last thing I want to mention for corporation. It's called Internal Revenue Code Section 139. 139 actually came out back in 9/11, right? Remember that 9/11? That's 2001, right? Long time ago. But so what does it say is, if the employer, which means that the company, is going to give some money to the employee, right? So some of the expenses, it could be personal expenses. There's certain expenses when there is an event that can qualify as a disaster, right? This COVID-19 is definitely a disaster. So what does it mean? So for example, some company, they give their employee, each person, $1,000. It says, because this lockdown, you have to work at home. So this $1,000 will allow you to buy the second monitor, to allow you to improve your internet connection, your Wi-Fi connection, all that stuff, right? So for this $1,000, right, normally employee, if you receive money from your company, that's become your income. But this $1,000 actually will not be included as your income. It will still be a deduction for the company. So that's no question, right? So, but the good thing is, for the benefit of the employee, they receive the money and they don't have to include as their income. I actually see quite a few companies are doing that. Okay, that complete my presentation. I think I just have to figure out if anybody have a question. Just give me a second.
So Michael, you can click on participants, and then the chat board will be down below on the right. So I have already seen some of the questions. So if you don't mind, I'll read it out.
Yeah, okay, I see.
So somebody asked, can I switch my RMD from my IRA to my Roth IRA account only this year, or can this process be done any year?
Okay.
So just in case, I will copy and paste this question again.
Okay, so could you repeat that question? I'm sorry, I'm actually see that now.
Switch my RMD from my IRA to my Roth IRA account only this year, or can this process be done any year?
The IRA, I think your question is the IRA account to switch to Roth IRA account, right? The Roth IRA. You can switch anytime. You can switch, but the new law that came out in 2017, the tax reform, actually says you cannot like switch back and forth all the time, right? So in the past, actually people doing that, right? They kind of, right? So how do you determine how to switch back and forth? You got to consider tons of things. You got to consider, how much is my income this year, and how much is my income in the future, and what's my tax rate going to be in the future, and what's my tax rate in this year? Tons of stuff. So you can still make a change. You can make a switch, right? You can make a switch now. You can make a switch, next year, right? The reason I pointed that out that might be a beneficial for you is this year, perhaps your income is going to drop. You may be in your lower tax bracket, right? So if you switch, from traditional IRA to Roth IRA, you have to pay tax first, right? So if your tax rate is lower this year, might be a good idea that you make that change this year. So that's my point.
Okay. So I see another question here saying that, so the 1,700 we have received in 2020 will be treated as credit in 2021 next year?
Yeah, so 1,700, so I assume you have one adult and one kid, right? So 1,200 plus 500. So this is supposed to be your credit, which means when you file your tax return for 2020, right? And they say you have to pay $5,000 the total tax in 2020, right? When you prepare your tax return in 2021, right? And this $5,000 will be reduced by this credit, right? Which is 1,700. So that's why I say, if you're 2018 and 2019, you make tons of money, you make $500,000. Therefore, you're not qualified. You're not going to get this money. Also, for people who didn't file tax return in 2018 and 2019, you're not going to receive this $1,200 unless for some people who are retired, maybe their income was low, but they receive some kind of 1099. In that case, IRS actually would look at those 1099 recipients. They will issue that $1,200 to you, right? For those people who we didn't even file tax return, but just because they received this, retirement, distribution that would show up on 199, they will receive that. But the whole point is, go back to my example. If somebody make a tons of money in 2018 and 2019, they're not going to get this $1,200 now. But when they file tax return for 2020, let's say 2020, they make very little money. And at the time, they will receive this $1,200 as a credit to their 2020 tax return. So I hope that not try to confuse you even more, but if you have any further questions, feel free to reach out to me.
Thank you, Michael. There are more questions. So say one person is self-employed, independent contractor, and he lost his job due to the coronavirus. How does he or she apply for UI?
Apply for the unemployment. That you basically you just have to go to the state agency, right? That you just say I'm self-employed. I lost all the contracts. I don't have any income, and you'll qualify. Right? It doesn't have to be employee, but as long as you can show before you have this taxable income, you've been paying the taxes. Yeah, you still qualify.
Okay. One more question. How can you spend 10 weeks payroll versus PPP in 8 weeks without rent or other expenses? Do they have to return any unused loan?
Well, the 8 weeks is for forgiving part, right? It just say you borrow money, and then the end of the day, right? You use it in different things, but you got to calculate, how much you don't have to pay back to the bank, and that will be based on these 8 weeks, right? Again, it's the expenses that you spend in these 8 weeks. That expenses including your payroll, your rent, your utility, and your interest, right? Only these 4 pieces. Normally, if you look at these 4 pieces, if you didn't lay off people or didn't reduce their salary, you should qualify for entire forgiven, because remember when you calculate how much loan you can get, it's based on 2.5 months, right? So now you already have 8 weeks, which is 2 months worth of the payroll. So hopefully that payroll plus some utility, other stuff, that will add up to be the same amount of the loan. So let's say you calculate, hey, end up it just you a little bit short. So the piece, that difference is the piece you have to pay back, right? And that piece will not be forgiven. So there is a piece, if you don't use up everything in these 4 items, then you have to pay back, right? And again, the interest rate is only 1%, so it's still a pretty good loan, right?
Okay, thank you. So one more question. So somebody said, when I reach the maximum claim in employment insurance, can I still receive the $600 per week?
This is probably a little bit beyond my expertise. I think so. I think as long as you can claim the unemployment benefit, right? Of course, I understand that's based on your insurance that you previously paid, all that stuff. But this is $600 per week. It's just an additional benefit that federal government give it to everybody, basically.
Okay, I think that's it for the Q&A, because we really already exceeded our time limit.
Okay.
Thank you, Michael. So we can't answer all the questions during the 15 minutes. So for further questions or business inquiries, please contact us via WeChat. We already have a WeChat group, or you can email us at info@svtic.com. And this webinar will be available for replay soon after we ended today's session. More information will be available on our social media platforms. So if you want to follow us, please go search SVIEF on Facebook and Twitter. And you can also subscribe to our newsletter. I will post a link after the event. And before we call it a day, I would also like to mention that, Thomas, would you share our PowerPoint, please? There we go. So before we call it a day, I would also like to mention again that SVIEF Club is offering a 50% off discount exclusively today for our audience. So if you want to join SVIEF Club as a member, please scan the QR code or email us at club@svtic.com today to enjoy the special discount. So we have a few webinars coming next month. Dr. Ling, a senior engineer at IBM, will talk about how big data benefits traditional industries on June 6th. This webinar will be in Chinese and will be streamed by SVIEF University. More information is posted in our WeChat group. Thank you, Michael, for your awesome presentation, and
thank you
everyone for your participation. We hope to see you next time.